Good morning, everyone, and thank you for joining the AuthorCell webinar. My name is Hayley Charters from Hack HQ. I'm pleased to host today's session and to introduce you to our speakers, AuthorCell Chair John Van Der Wielen, CEO and Managing Director Paul Anderson, CFO Jim Piper, and Vice President US Sales John Walker. Shortly, they'll provide an overview of the company's results, along with an operational update, including the status of the US rollout of Remplir and other strategic initiatives. Questions are absolutely invited and encouraged throughout the webinar. Should you wish to ask a question, please use the written Q&A facility at the bottom of your screen. Please welcome AuthorCell Chair John Van Der Wielen to start our session.
Good morning and thank you, Hayley, and welcome to the management team. Look, I'm really pleased to report that AuthorCell's Q4 results demonstrate a strong foundation in the USA and the international markets, and most importantly, a robust financial position that displays that we've got more than enough cash to deliver on our plans. Our growth of 44% over the previous year is a great result, but what you can expect is that growth rate to accelerate because we've established operations in several new international markets, including our largest market in the USA. And if you refer to the last 10 quarters, which has been compounding at a rate of 10%, this is actually a significant growth factor. However, you'll now see this increase because it's quite simple. More markets, more hospitals, more surgeons equals more revenue. The product is now approved in many international markets, and we're simply working through the adoption and training phases. We anticipate laying further foundations in the EU and UK before the end of this calendar year, and the board's been very conscious of laying strong foundations that will provide long and consistent growth. We want the rate of growth to be manageable and sustainable, and we also want the growth to be across diversified markets and products. That includes geographies and currencies. And so whilst we'll provide more detail on these key highlights shortly, I do want to summarize the essential points. The company is now financially independent. It does not require additional capital to deliver on its current plans. The growth rates will accelerate now that our global foundations are in place. I think as a small cap company, we've got a very unique circumstance in that we have no debt, we have no royalty. We have a market position where we own our own patents. We manage and manufacture our products end to end with 14 international approvals. But most importantly, because of our manufacturing process, our ownership of the business, we will deliver a margin that sustains us towards a profit quite quickly. Our long-term strategy is absolutely focused on sustainability by ensuring that each stage of our expansion is well managed. And over the last 3 years, we've built the team, we've enhanced the manufacturing, expanded our global footprint, and strengthened the balance sheet. The upcoming financial year will focus on this growth of revenue, and that will deliver our pathway to profit. So with an annual revenue growth of 44%, a strong balance sheet, and increasing growth, I think you'll see some great results in the future. With that, I'll hand you over to Paul Anderson, our founder and managing director.
Thanks, John. Thanks for that introduction. For those of you who don't know, my name is Paul Anderson. I'm the managing director and co-founder of AuthorCell. AuthorCell is a unique company. We work in the regenerative medicine space, and particularly the regenerative medicine space for the regeneration of human bone, nerve, and tendon tissue. And we do that via a collagen-based medical device platform that we manufacture here in Western Australia and ship now internationally and globally for a product for those indications as stated. I just want to give a brief overview. We are, important to note, a fully funded company and investing into our sales growth quite aggressively. We have $44 million in cash reserves, as John mentioned, no debt, no royalties, and that leaves us in a really unique and strong and powerful position to execute on our commercialization of our technologies globally, but most importantly into the United States. I think it's really important to note that Remplir is the name of our lead product for nerve repair, for those, again, who don't know. Our US strategy is well on track with continued global expansion. And then what that enables us to do is to really take market share in the $2 billion nerve market in the US, and of course the $1.5 billion international market. So in combination, take advantage of the $3.5 billion nerve repair market with a product which is unique, a product that has real resonance, and a product that has an outstanding, best-in-class scientific narrative. We're now approved with that product in a number of jurisdictions, including Australia, where we're fully reimbursed in the private healthcare system and currently available in just about every public and private hospital in the country. And I'll talk a little bit more about that as we go through. So we're approved in Australia, New Zealand, the USA, Canada, Singapore, Hong Kong, and Thailand. And so we're really establishing not just a bridgehead into the United States market, but a really strong global footprint that it also includes an application for approval of our product, Remplir, to be used in the EU and the UK. And we should see that approval come through in the later part of this year. And so from a US key commercial metrics perspective, and John Walker, our VP of Sales, is going to talk about this as we go through the presentation. We're really setting ourselves up for strong growth and strong sales that are continuing to build. And as John mentioned, we're on target for a record month this month. And so we're continuing to see good momentum in that space. And so, what that's going to open up for us really is a material uplift in US revenue in the upcoming quarters, and laying the quality foundations are so important in that endeavor. Not just a slash and burn type approach, but laying quality foundations that sets ourselves up for long-term sustainable outcomes. And so now we have a laser focus on winning in the Americas as we describe it. The commercialization of Remplir continues to be on track and in some cases ahead of expectations. And the distributor network that we're expanding now has some coverage in some 20 plus states with 50% of the US population covered. So that gives us, again, a fantastic platform to do a couple of things. And that is to grow our surgeon numbers, to grow our hospital numbers, to grow the quality of those surgeons and hospitals. And that relates and translates into sales of our product in a sustainable and high quality way. I think it's also important, though, as we mentioned, this international footprint, with the lead country here being our own country in Australia. We have continued to really grow the adoption of our product in the Australia, with growth for the quarter, exceeding. And just to give you an understanding, in the last quarter within Australia, we've done over 1,000 cases using Remplir, resulting in over $1.5 million worth of revenue from that endeavor alone. And that's in the third full year in market. So that just gives you an indication of the uptake potential of this product. It gives you the indication that our scientific narrative is resonating and that surgeons enjoy using and want to use our product. And we're now seeing that replicated into the US marketplace as well. I think from a footprint perspective, we've recently announced a Thai distributor for Remplir following the Thai approval. Why Thailand? You may ask. Thailand has a very high number of nerve injuries, and surgeons from within the Thai community are globally respected in this space. And so Thailand, although it's a smaller Asian country, has an international profile with regards to nerve repair, and so hence our drive into the Asia Pacific through Hong Kong, Singapore, but also into Thailand. Also important to note, as I mentioned at the top of my slides, that we've applied for Remplir approval in the EU and UK, and we're progressing that application according to schedule. And further to that, we also announced recently in the quarter that we did a Remplir global humanitarian reach to the Ukraine. We did an initial delivery at the start of this year for some 30 odd Remplir products, and we've now backing that up with a further distribution into the Ukraine. Important to note that we had Dr. Zakir Plakar with us in Australia a couple of weeks ago or 3 weeks ago. He's the key driver of the use of Remplir in the Ukrainian scenario, and we were blown away by the usage of Remplir in some of those cases, and blown away by the complexity and the severity of the injuries in which Remplir is being used. And so we're delighted to host Zakir here in Australia to inform us about how that's going. I think it's also really important to note that we continue to advance our product pipeline. And probably one of the most exciting areas is really within the area of radical prostatectomy, nerve-sparing radical prostatectomy. We now have over 250 surgeons are consistently using our product across all major states within the Australian marketplace. So we're delighted about that, and I'll talk a little bit about that as we go through in some of the milestones. And so we're really delighted with that radical prostatectomy capability, and what we're seeing is early continence recovery and signs of erectile function at an earlier time point, and we'll talk a little bit about that as we go through the presentation. And so lastly, from a pipeline perspective, we've been really excited about the commencement of our US regulatory pathway program for a smart wrap tendon wrap. So this is a product that complements our bone, that complements our nerve, and really is used in the area of tendon repair. And I've just recently returned from the US where just about every single surgeon I spoke to wanted to know, do we have a product for tendon repair as well? And I was delighted to be able to inform them that is the case. So some of the key metrics, really excited to read these numbers showing great growth across all the domains. And so we've recorded a record 30.2 million for the full year in 2026. And that's up 44% on our prior financial year. And in anyone's language, a fantastic step forward in our overall revenue generation. And we also saw a record revenue generation for the June quarter of 3.8, which is an increase of 20% over our March quarter. And so we're really seeing, a record quarterly revenue and strong performance across all of these metrics. Great growth in revenue, great growth in our quarterly revenue, a really solid position of $44 million in the bank to enable us to execute on this commercialization scenario. But overwhelmingly, the indicators that we sell, we're growing our surgeon base, we're growing our hospital base, and that in turn will grow our revenue base. And so we've really just scratched the surface with revenues in the United States. So we remain very buoyant and excited about that. And with that juncture, I'll hand over to Jim, who will discuss our revenue and cash flow performance. Thanks, Jim.
Thanks, Paul. We've moved to the next slide there, Paul. The quarterly's revenue was in line with expectations, continuing the company's track record of consistent growth. The 10% quarterly compound growth rate really underscores that this isn't a one-off. We've done this for now 10 quarters in a row, and it really reflects the genuinely growing underlying business that we've created and established here in Australia and across our customers. Importantly, this growth has been achieved without material contribution from the US Remplir sales, which speaks to the scale of the opportunity still ahead as US contribution ramps up due to the high average price and the direct model that we're using. On an annual basis, growth has been fundamentally driven by product revenue from our collagen devices. As you can see, the revenue achieved in FY26 demonstrates the strength of the business growth and the adoption of our collagen devices in our base markets, and positions us well for the next phase as we grow Remplir and commercialization activities expand us across North America, Asia, UK, and Europe. Now, if we move to cash flow, move to the next slide there, please, Paul. As we move to cash flow for the quarter was in line with expectations. Internal forecasts and our stated use of funds through our equity raising activities in the financial year. Spend remains on track and disciplined. Where there's been a timing impact, it reflects deliberate investments. For example, we've been improving our internal business processes systems across our financial systems and our sales and marketing digital platforms. We've recently gone live with our ERP in April, and we've been improving our CRM and other digital means to improve our connection with our customers. We've also been lowering our manufacturing costs through the introduction of automation and processing. And we've just begun the first stage of our upgrade of our manufacturing facility. This planned manufacturing upgrade will increase our collagen devices or device manufacturing by 4 times the amount of current installed capacity as today. The project's only just started, and in FY27, we'll see continued spend throughout the year. As revenue continues to grow, we'll see a direct impact on cash in the coming quarters. Remplir is a high margin product, and its growth will improve the operating cash flows, progressively reducing our cash burn as we move into profitability. So to reiterate the key point here, funds available stand at 44.1 million. We have more than sufficient money to support the company's growth through the commercialization of Remplir in the US and our other expansion activities without the need to raise funds. Thank you, and I'll pass it back to Paul.
You're on mute, Paul.
My apologies, everyone. Just thank you, Jim, for that really important note that we're putting into place the foundations to support the growth of this really exciting opportunity. So thanks, Jim, for that. I wanted to pass over now. It's a great pleasure to have John Walker, our Vice President of Sales in the US. John is a seasoned medical device professional and sales manager. He's got over 10 years experience within the nerve commercial space. He's a decorated sales professional that has a significant track record in building and growing businesses within the United States, and particularly in the nerve space. And so without further ado, I'll hand over to John. Thanks, John.
Thank you, Paul. Thank you for the introduction. I really appreciate the kind words. Thank you to everybody for inviting me to be part of the call tonight. I'm excited to share what we have going on in the United States and where we're going in FY27. So when you look at the U.S. market, huge market, a lot of people, a lot of nerve injuries, right? 700,000 injuries per year in the U.S. That are repaired. So when you take a look at the market, you have to say, we can't get it all in one shot. So we have to focus. What we decided to focus on were the types of injuries with the types of surgeons where Remplir can make the biggest difference for the patients and have an impact on their healing. So when you look at that market, it's about roughly 10% of the market where we decided to focus with surgeons that are hand surgeons and plastic surgeons who are microsurgically trained, who address crush, compression, and short gap injuries. So crush is just what you think. Think construction accident, brick falls on somebody's arm, injures the nerve. Compression can be anything from carpal tunnel to tarsal tunnel, where your body compresses it. And short gap is anything under a centimeter, where there's a small gap, the nerve can be pulled together. Remplir can create a nice environment for that. So we decided to impact and focus on that portion of the business to start. Again, 5 to 10% of the business initially. By the way, our break-even point is about 1%. So I think overall, when we achieve our goals, everybody's going to be very, very happy. Next slide, please. So FY26, what did we do and what are we proud of? So I'm very proud of the efforts that we had. The foundational team, which started off as Phil Edmondson and myself, went to the market, started sourcing distributors and markets where we had targeted accounts that were nerve centers of excellence. So you may have heard of some of these in the past: Cleveland Clinic, Duke, Ohio State, Cedars-Sinai. Those are not only world-renowned for nerve repair, they're world-renowned for medicine, period. So we hired distributors in those markets. As Paul said earlier, 18 distributors in over 20 states, and roughly about 50% of the U.S. population was covered in FY26. We had implants go into over 70 hospitals, implanted by 76 surgeons in those markets. And so one thing you have to consider, the U.S. market that's different than anywhere in the world, is our distributors do not purchase the product. They're essentially agents, and they have relationships in the markets. So the way it works in the U.S. is they will bring us in, we'll meet with surgeons, and we'll get advocacy from the surgeons saying, yes, I would like to use Remplir versus what I'm doing today. When that happens, we have to go through a process at each account where we submit what is called a VAC submission. It is a value analysis committee. They evaluate the product that you're submitting based on clinical evidence, efficacy, economics, comparing it to their competition, and then they approve it for use in that institution. So if I sell a surgeon today, that doesn't mean I'm going to get anything used tomorrow. That process may take up to 6 to 12 months. And so that's why you see a little bit of delay from your foundational work to actually seeing the rewards of that work. We're starting to see it now in big institutions, like I mentioned, the Dukes, the Cedars-Sinai and whatnot, but we have a bunch more in process that we are just waiting for them to pop as well. Next slide, please. Okay, So we touched on the first two the graphs there, and they're just what you want them to be, to the right and up, right? That's where we want to go, to the right and up. The graph to the right is the units by quarter, and I'd like to address that. So if you look at Q3 and Q4, they look somewhat flat. In Q3, we had a few stocking orders placed in states like Oklahoma. And what a stocking order is when the hospital pre-buys the product, knowing that the surgeon is going to use it in the future. But you get a nice bump in sales at that time, it trickles out over time, and they replace it. If you look at Q4, we had no stocking orders. That is purely implanted product by the surgeons. If you look at the procedural volume in Q4 versus Q3, it was about 20% increase versus Q3. So that tells us that we are putting product in the right places with the right surgeons, and they are using it. And at the same time, we're expanding our base of usage. And that brings me to my next point. Paul, next slide, please. As we look at FY27, our strategy is based on 3 pillars, and it's expand, educate, and execute. And when we look at expand, we're talking about expanding our distributor markets, getting into more states. We'll be in over 30 states by the end of the year, covering 80% of the population. We're going to expand our direct team by adding people to our team, getting feet on the street that are help driving growth faster. We are going to expand the indications that we address. Not only are we going to look at the plastics and the orthopedic hand surgeons, we're also going to start approaching the urologies and whatnot down the road. We're also going to expand the number of surgeons that we're working with. We'll work with over 100 surgeons this year, between 150 and 200, and 100 to 150 accounts. We're going to educate surgeons on the advantages of Remplir and nerve technique, good nerve repair, utilizing Remplir to get better results. And we are also going to execute our business plans. Each distributor has built a business plan that is very focused on the accounts in their market, the surgeons in those accounts that drive the business, and the events that are going to help support it. My team is doing a great job, and like I said, we're expanding it. I only look forward to having a greater impact in the market than we have today. The other thing is the handling of the product. When you put this in a surgeon's hand and you say, try this out, and you demo it for them, and you say, compare that to what you're doing today, it's like a light bulb goes on. They're like, this is the product that I need. I need it for my patients. This is the right product. From how it handles to how it heals, it's a fantastic product. The other thing that's been great is distributors now contact me. In the beginning, I was out looking for representation in markets. I would cold call and do those different things. Now I have them calling me because their colleagues in other markets are telling them what a great product Remplir is, what great results they're getting, and what a great company OrthoCell is to work with. And then finally, is surgeon advocacy. We're working with some of the top surgeons in the U.S., some names like Michael Dorn, Harry Hoyne, who was just recently in Australia, fantastic surgeon in the Cleveland market, Aaron Morgan, Sanu Jain, and they're at institutions like University of Cincinnati, Ohio State, Cleveland Clinic, everywhere I've already mentioned. They are now advising their colleagues and their peers that, hey, this Remplir is the real deal. You need to be using this as well. So those are the reasons that I'm optimistic looking forward, and I believe that we're in position and laid the foundation for a great 2027. Paul, thank you.
Thanks, John. That's a great synopsis there. And I just want to add to that. I just returned from the US. I've been in the US for 2 weeks. I saw over 30 surgeons in that period. And I can tell you that, echo John's words, that we have a unique offering. We have a product that has a superior scientific narrative beyond anything else that's in the market. We have a product that handles second to none. We have a product that makes the surgeon's job easier. We have a product that is cost effective. And so when you put all of these things together with great stewardship and leadership, a great product that's unique and differentiated in the market, a market which is large and growing and requiring improvements from the Generation 1 style products that were introduced. So we're buoyant, we're excited, and we're really, really looking forward to this really exciting next growth phase that lays in front of us. It just makes me a little weary just looking at this slide. It's been an incredible year. We've achieved a lot. And I think it's worth noting, we've really, as John said, had incredible foundations now in the United States, not just by having distributors, but our own workforce, but also now starting to see organic growth. And that organic growth is coming from word to mouth. So those foundations and organic growth are essential. Any great product has good organic growth, and we're starting to see that. The Canadian market is certainly a smaller market. There's no question about that, but it's an important North American market. And we've appointed our first 2 distributors in Canada. We've completed our first surgical case. And so we're really delighted about that. Again, Hong Kong, a global footprint market for us, designed to give us access into the special economic zone within the Chinese market. And so, a Hong Kong distributor and doing our first clinical cases there in Hong Kong was really important benchmark in driving us into that Chinese market. The UK and EU submissions have been submitted and lodged, and we're going through with a BSI as we speak in that, and we expect that towards the end of this year. Tax refund, I think we've been confident and capable of attracting those rebates over a sustained period of time. We have indeed appointed as distributors in the United Kingdom. And just as we did in the US, we've started preparation for entry into the UK with a high-quality distributor, a biologic specialist, and also now key opinion leaders, of which we've had both of them come and visit us into Australia in recent times. And of course, I mentioned the Thai market at the top of the presentation. So we've now appointed a Thai distributor, and we're really looking forward to getting some traction in those markets as well. So what's ahead of us? There's been a lot of questions, and I receive a lot of questions around our radical prostatectomy approach. It's a really exciting indication for us, one that continues to grow the surgeon base. We did, however, announce to the market that we would present some of the initial data, and so we haven't been able to do that. And the reason for that is the surgeon involved wants to publish the data. The surgeon involved is delighted with his outcomes, but wants to publish that, and hence we haven't announced that data in advance of that. So the surgeon is the largest user of our product in Australia, and so he continues to use our product. He's looking to publish that. We're looking to give him assistance to do so, and so I would ask for the market's patience, and that data will be coming shortly, and we'll give continued updates as we move through that process. Clearance in the EU and UK in the second half of this year. And then, of course, our Smart Wrap Tendon US pre-submission in the second half of this year as well. So that's a really busy program, one we're excited about, and one that we've really tailored towards achieving excellence in the US market. But at the same time, as I mentioned at the top here, we've got incredible market penetration here in Australia. Over 1,000 cases completed in this last quarter alone. And that just gives you some indication as to the immense opportunity that sits in front of us in the United States marketplace. And with that, I'll hand back over to John Van Der Wielen, and we'll take some questions.
Great. Thanks, Paul. As we're compiling those questions, I think, in summary, we positively look forward to both the pathway for increased revenue, heading towards profit, more international markets. And from the board's perspective, we are very confident about the way we've laid the foundations for the future. So over to you, Hayley, questions.
Thank you, gents, and I appreciate the update. Some coming through on text and some on email. What sales revenue are you expecting from the US going forward? Will the growth rate accelerate from current levels?
Hayley, I'll jump in on that one just to say clearly we are not going to make some statistical forecast here live. What you can say, and I think the important one to hold on to is, like Paul said, in Australia, with 1,000 in the last quarter, we estimate the US market to be around 20 times the size. So you'll see considerable uptake over the next 12 months. And what we can say is, as an example, we closed off June and July looks like being a record month. It's been very, very strong already.
Thank you, John. And what's the sales price and margin for Remplir in the US?
Over to you, Paul.
Yeah, so, obviously as a company that manufactures our own product, that leaves us in a really unique position. We own our manufacturing margin, and that enables us to have a product that has, really solid margins of 60 plus at this stage, and that's only growing. So it's a great position for us to be in. It gives us pricing flexibility. It enables us to really target the commercialization process effectively. And as I can't overestimate how important manufacturing your own product is, our competitors do not do so. They have, majority of them are contract manufacturers. So that leaves us in a really strong position as we embark on this really second phase, if you like, of the commercialization process.
Paul, just to add there, perhaps the way investors should look at it is actually keep the unit price the same, but we get a 47% uplift in current currency. So that'll clearly fluctuate. And one of our strategies in the business, we're currently bringing in Singapore dollars, euros, US, and Australian. So we've got a natural currency hedge. But essentially, the US pricing is because of currency in Australian dollars, give or take around 40% higher, which is what leads to strong margins.
Thanks, John and Paul. A couple of questions around the break-even model. What sales volumes are possible in the US beyond the 10,000 break-even target? Is the 5% market share number your target?
No, the 10% is the board's strategy going forward. We think over a period of time we'll get to 10% of the market. Now, what is also needs to be understood, we've stuck with the current peripheral nerve market penetration, but there's additional indications which we're constantly developing in Australia, and that's areas of like the prostate. We're working in breast cancer surgery, working in a variety of different areas, and then Paul's also explained around the tendon product as well. So we try and use 10% in the existing peripheral nerve market. Now that is so significant, it's not funny, right? At the sizes, 10% of 700,000 procedures is 70,000 procedures multiplied by current revenue and profit margins is a number that would excite everyone.
Definitely some excitement in the questions too. Congratulations on the strong US rollout. Could you provide information on repeat surgeon usage? Of the 76 surgeons who've purchased Remplir, are you seeing consistent reorders from early adopters? And as those surgeons gain experience, are they using Remplir in a greater proportion of their nerve repair procedures over time?
Over to you, Paul, and or John Walker.
Yeah, I'll just say that one first, John. I think it's a great question, and we're seeing good, consistent repeat growth from surgeons. There is a pathway that's flowed here, though, and that is that surgeons will do a couple of cases, and then they'll stop and wait and see, and then they reorder again. So we're seeing two things. We're seeing good, strong repeat orders after their initial bedding down period. And we're also seeing, as I mentioned, this organic growth where surgeons are finding other indications within their practice which they can use. So we're seeing, repeat orders and we're seeing organic growth. John, have you anything to add to that?
I think that's a good summary. Access is the name of the game. Once they get access to it, then they can start increasing it. It's just building that access that's the limiter.
And just to round that out, there's also a question around the market share or uptake of Remplir in Australia.
Yeah, so we've had a stellar product, and I've been involved in product launches across the globe over the last 25 years. And this has been the most successful one that I've been involved in. It's been uptaken by plastic reconstructive surgeons. It's been used by urological surgeons and now breast reconstruction surgeons as well. We've seen tremendous directed growth through our partner and device technologies. We've also seen tremendous organic growth in this marketplace. And so, we think we're probably at around between a 5 to 8% market share right now of the total of the overall market. So still lots of growth to come in the Australian marketplace. It continues to be a flagship for us and really provide foundations for the US entry. And what I mean by foundations, not just economically here, but commercially and clinically as well. And so we have developed a really, really strong cross-cultural and continental collaboration between the United States surgeons, Australian surgeons and UK surgeons, and indeed now Ukrainian surgeons. And so, we're really excited about the potential that still remains here in the Australian marketplace.
And just to direct our attention back to the US for a moment, Paul and John, at 12 months post-launch, the US is tracking at approximately 120 units a quarter, virtually identical to Australia's early run rate at 12 months in. Given the US market is 20 times larger, what structural barriers are keeping the US launch curve matched to a much smaller domestic market?
Look, I think it's really important to note is that, as John said at the top of the call, is that you need to be very judicious. You need to be very focused. These are foundational years in the market. We could race out in what's called slash and burn and try and attract every surgeon in the whole country and trying to get as many people on the ground as we can. We lose the narrative. We lose control. And so in this foundational time point, it's absolutely imperative that we have a very defined, targeted approach that gets us the very best surgeons in the world and the very best universities and the very best hospitals. That creates momentum. That creates a foundation for us to expand our direct sales force, expand our distributor network. It gives us the opportunity to expand in a solid, sustainable way. And that's what we're going about at the moment. John, anything to add to that?
Yeah, I would also like to add that, it's the payer system in the U.S. too is the hospital pays. So going back to the VAC process that I announced earlier in the call or mentioned earlier in the call, that's the limiting factor, right? You have to go through that process with these institutions. You can't do business with them until that's through. So that's a little bit of different model here in the U.S. Once you get through the VAC, you are approved and you can be used. But again, it could take anywhere from 3 to 12 months. And we've seen that.
Thank you, John. One specifically around, can you add more color on the forward purchase made by the US in March? Is that usual practice by hospitals in the US?
John?
Yes. So yes, it's all up to what the hospital wants to do. If they want to own the product or if they want it consigned or if they want it brought in. And a lot of it has to do with the rules of the institution. This was advantageous for them to put it on the shelf because they had surgeons that were requesting it on a pretty regular basis at that one institution. So they brought it in. We've had that happen at a couple others since then too as well. And it is a common practice. It's not usually in the beginning process or launch phase because they want to see that it is a product that they're going to use on a consistent basis. Nobody wants to buy $100,000 worth of product and have it sit on the shelf and spoil. So therefore, you usually establish usage, then they will put a purchase and put it on the shelf.
And I think, Haley, just to jump in there, that's why we talk about that sort of more aggressive growth in revenue or a hockey stick, that as you expand your hospitals and the surgeons, then your stocking orders increase. I do just want to remind investors that I think, from the board's perspective, we're the custodian of the capital and the progress and the strategy. And what you want to avoid, as Paul's allayed to, you want the uptick of this product to be sustainable so that we have the ability in the US and other markets to do either exclusive and global distribution deals or work with a really large pharma and medical device company. But the best way to establish value for shareholders is get the product up and running, training surgeons, increase demand, and then negotiate with a large pharma company. It's not doing that in this early stage. So our strategy of the way we're distributing has been designed the way we're doing it. And it's important to focus on the long term of the ability to do distribution deals, not that short term. And I think we're approaching it on that manner to manage our capital, manage the distribution, and look for the potential enormous upside that could come from more global distribution deals with pharma companies.
Thanks, John. And just one question in relation to share price. Your last equity raise was done at $1.30 in October 2025. Today, your share price is down at 82 cents. How do you read this and your comments towards rebuilding confidence and credibility?
Thanks, Haley. And look, you can rest assured I haven't had bouquets of flowers from the people who paid $1.30 during the capital raising. But let me go back to the important role of being a chair and having a strategic board. We've seen turmoil around the world. We've seen significant downturns in life science companies and companies that have got themselves into a position where they're raising cash at a price that would be extremely difficult. The board is very proud of the fact that we now have a balance sheet where we don't need any more cash. We're sitting on $44 of cash, no debt, no royalty. And in a market at times when the world's in turmoil, the one thing this company doesn't have to worry about is the strengths of its balance sheet. So yes, the share price is down from the cash raise. No, we wouldn't apologize for doing the raise when we did it. It was really good timing and it strengthened the company. And from here, what you'll see is growth in revenue. I think the company's grossly undervalued. As people see quarter on quarter, the significant growth that's coming will quickly re-rate and that'll all be forgotten.
Thanks, John. Just to round out the final line of question, we've got 4 minutes left. How profitable will Orthocell be with the 5% market share that you've quoted? I think we've already covered that one. Let's move forward.
It's difficult to be exact, but what I want to give people the understanding of, one, we don't need more cash, so there's no dilution coming. 2, the margin's very sustainable. And therefore, 3, once we come into the break-even point, what you'll see is then consistent profit delivered for the company. So I suppose if you compare us to other companies in the life science space, what we know is we don't need a significant amount of revenue to come into break even.
And just one to round out manufacturing. Does it make sense to continue to manufacture in Australia?
Yeah, certainly. I'll take that question. I mean, I think we've got a fantastic manufacturing foundation here in this country. The fact that we own our manufacturing enables us to have a good margin with that product. We own our manufacturing margin. Important to note that Australia is the producer of the finest collagen in the world today. Our biosecurity and our borders protection are not to be denied. And just to give you an understanding of the 14 viruses that you would have to apply for a test for to get access to the US market, 9 of those don't even exist in this country. So we have incredibly pure herds. We have fantastic raw material. We have good cost effectiveness and cost of goods. We have a 3-year expiry date. We can ship anywhere to the world, and we've proven that. We're shipping now to Brazil and to Ecuador and to Colombia and to the US and Canada. So we know we can ship it anywhere. We know we got good cost of goods. We know that we own our intellectual property. And so in answer to that is yes, we think that it makes sense to continue to do so. Having said that, if there was some geopolitical force that meant that we would have to move or potentially consider moving to the US, we have absolute capacity to do so. And so we find ourselves with really great flexibility in the model, but very content with where we are currently.
And of course, the diversified company, Paul. We've heard one question around Striate. We've heard very little about Striate Plus recently. Can you please provide a general update there?
Yeah, look, I'd be delighted. Striate is in the hands of our partner, Henry Schein and BioHorizons. Just for those who don't know and can't remember, but they paid us $23.5 million for exclusive global rights to the Striate Plus for guided bone regeneration. They now deal with that product exclusively. They've been very aggressive in their expansion, and really important to note that they have really accelerate the use of the product. And we manufactured some 60,000 units for them last year, and so that's provided a tremendous foundation for our company. It's provided a tremendous foundation for our manufacturing processes, and allows us to concentrate wholly on the big opportunity in Remplir, and so that's where we're at. So Striate has been a tremendous success. We have wonderful working relationship with our partner. We continue to manufacture for them on their behalf, selling the product to them, and so it's an exciting foundation piece in our company, and enables us to really focus on the Remplir as you've heard today.
Brilliant. We're almost at time, John. Any concluding comments to finish off the webinar for today?
No, I think just thank you to all the investors who have dialed in. Thank you again for people's patience. Patience will be rewarded in the long term. And I think we have such a strong board and experienced people like Professor Fiona Wood, Professor Ravi Thadani in the US, who is now the Chief Medical Officer at Cedars-Sinai, as an example. And those people with the advisory capacity for us are delivering the right strategy. And Paul just touched on one there that it's often forgotten. I think this year we will have manufactured closer to 75,000 medical devices. So the strategic deal done with BioHorizons at the time is what is producing the margin on the nerve product and has allowed us to develop the manufacturing facilities. And again, just to reiterate, we know what we're doing with the capital. We know what we're doing with the rollout of the distribution. And I think, not too far down the track, you'll see both the uptick in revenue, but the likelihood of more global distributors becoming very interested in the company. And proof to that is that whole Striate dental rollout is now a global success. We see the same coming with the nerve product. We'll then move on to the tendon product. And we also still have a pipeline of other products, which is like the collagen rope and so on. So we're in this for the long term, not the short term. Couldn't be happier with the strength of the balance sheet, progress of the team. And I look forward to these continued quarterly updates. So I will finish on the point, Hayley. We do the webinars quarterly because we understand for investors there's a lot to digest. There's a lot of progress in terms of what we're doing, and we'll keep doing the quarterly webinars to make sure our investors know what's on the horizon for us. But thanks again, thanks to the team. Look forward to an update next quarter.
Thank you, gents, and to our valued attendees as well. That concludes the webinar for today. If you have any questions, please direct them in writing to general@authorcell.com, and our team will endeavour to reply promptly. Thank you, everyone, for your continued support and for joining on the line today.
Thank you.